This is early on a Wednesday morning. We have Powell speaking at 10 o'clock. I'm looking at a gold trade, looking at a short here, because the trigger is 1813. So price is closer to the short trigger, which means that the short trigger level should be pulling the price down. Activated the auto trader just now, took a short trade, targeting 100. All right, so done with gold. This is a funded account, and the only other market I'll be looking at is oil. Okay, so the oil chart just took a short because the trigger is at the short trigger is at 76.90. So price is closer to the short trigger, which means price is going to be the level of 76.90 is going to be pulling the price down. And activated the auto trader on shorts. So this trade takes a long time, not unexpected. If you're wondering where the stop is, it is slightly above that pivot high on your left. So yeah, just dragging. Well, finally, it was not too many bars, but this trade took a long time. All right, we have Powell speaking at 10 o'clock. I probably will not be doing anything with indices until after he's done, unless there's some good opportunities. I will definitely, if I am in a trade, I want to be completely flat by 9:50. 10 minutes before he starts, and then we'll see from there. All right, so it's Wednesday the 8th, and of course, past couple of days we had Powell's testimony, which made trading somewhat challenging, especially with the indexes. But I think we did okay. In any case, just wanted to give you a quick update on the accounts that I'm following for the month of March. So again, to review, each account, one is a 50,000, one is 150,000, and each one starts the month after the payout with $10,100 above the starting balance. This way I have 10,000 available for drawdown, and yes, I experience drawdowns like anyone else. So this way I am not in danger of blowing an account. Which is why I encourage everyone who would listen to grow their funded accounts. Don't get tempted by grabbing some money quickly. It is best if you are patient, grow the account, and then you're not worried about having the drawdowns that we all experience. Now, so why is such a discrepancy between the 150 and the 50 as far as performance so far for the month? So the 150,000 only takes the actual alerts. It would actually take only the buy or sell trigger, whichever triggers first. It only looks for $100. it looks for just one trade with one contract for each alert. And today, because of the testimony, the only instrument I felt comfortable trading as far as the actual alerts was the oil chart. So that's the only one it had for today. Now, the other account, the 50,000, that takes any qualified trade in a direction of the trigger. Now, what I mean is, and I described this concept in the video from Saturday, if you want to take a look at it. So the idea is, because of the importance of these numbers, as price is getting closer to the trigger area starts pulling it toward it. So in other words, once, in this case, the NASDAQ, and I'm going to show the oil chart next, as price starts getting closer to this trigger, the trigger begins to pull it up. So I'm looking for long trades. And I can take a whole bunch of $100 trades after a pullback in the direction of this trigger. So the short triggered as well, but of course this was Powell's testimony as soon as it came up. So obviously no one would trade this 10 o'clock candle right as he's talking, but the concept is the same. Let's say he wasn't speaking. The idea that price starts to come closer to the sell trigger means that price will probably start accelerating toward it. So I am looking for short trades, and there are many opportunities every day with this kind of an idea, and that's why you see this total here, which is very different than trading only the alerts. Now, don't get me wrong, this $150,000 account is doing just fine. It's up over 2,000 for the month so far, and this is only the 6th day of the month. Excuse me, let me take care of the dogs. Sorry about that. And actually, in the channel, I actually posted that NASDAQ, as long as it's over 150, it is bullish toward this trigger. So the trigger was at 234. And of course, if you traded just the trigger, it would have been fine because the high is like 250. So plenty of room to get you 5 points. But the idea, and that would be fine. So if I traded the alert for the NASDAQ, and I did not for today because of the testimony, this $150,000 account would simply take this trade for $100. So if we take a look at the oil chart, oil last night I posted a sell at 76.90. And so this is the one I did take the actual alert. There was the break of the trigger, easy trade. There was no heat on this trade, quick $100, not an issue. But actually, with the idea that you can get in early and start having short setups, this is an example. You see how price kind of wanders above it, but once it starts coming really close, it accelerates towards this trigger. There was this attraction. This level is pulling the price down. And like I discussed in a video on Saturday, it doesn't stop attracting just because price is below it, which is why you see very often this phenomenon that price comes back to the trigger. So that's why, in a way, just encourage taking quick profits, because very often, and you don't know, how big this move is going to be, but very often price comes back. So in oil, I just kept looking for short setups, and there were a number of them today in oil. Even if price goes above and it looks like, well, maybe it's going to switch and turn bullish, which it could. If it continues higher, then the trigger, the buy trigger would start pulling the price up. But when you see this kind of a turnaround, like it tries and then it fails here, it is very apparent that there is a very high probability that price will once again hit this trigger and probably go below it, which is what you see here. So I just kept taking oil shorts today. Another example here, price comes back. Look at this one here, just touches the trigger and goes down, goes up, and again below, and I don't know if it comes back again. It tries to come back all the way to the trigger, but doesn't. And here it does, actually touches the trigger again and retreats. So, so that's why one account is doing so much better than the other, because once you begin to understand that these alerts are more than just trades in and of themselves, which you can do fine just using them as trades. But when you begin to look at them as a force, as a level that is pulling the price. So if it's a sell level, it's going to pull the price down. If it's a buy level, it's going to be pulling the price up toward it. So just to show you a few examples of, and I don't know if it's from today. I just took screenshots of things. I don't know if it's from today. But just to show you, by the way, that no matter, you can do everything right, but it's not going to eliminate losses. Losses are just part of this business. So, sometimes it might take 3 or 4 trades until you hit your $100 target. Here is another example. You take a loss first. First it was a loss, and then a win. The point is, if you are trading, as I say, with the market, meaning you identify if the market is stronger or weaker, you just have a higher probability of actually hitting your profit target because you're trading with the market. You're not trying to fight it. Because I think at that time the trigger was 1851. So because I'm close to 1851, I am counting on price to go higher toward 1851 and up. Okay, so this is it for today. Once again, I am really focusing on the group now, so that's why I'm not making a video every day. For now, some people need help and they're reaching this next level, and so I just want to make sure that everyone in our community is successful. If you want to join us, give me an email or go to our website and join. Thank you, guys.